It's kind of that same dynamic that we look out the forward market, regardless of what happens to disruptions on the front end, is likely to be oversupplied on the forward. Because you take recently the Shahara field, it's gone up, it's gone down, more recently up and down 300,000 barrels per day. So if you did lose that supply that came out of Libya right now, or a portion of it, most of the market would view it as being temporary, as we've seen over the course of the last several years. So yeah, it would create and reinforce a spot price move to the upside in that 75 potential plus range, but it wouldn't do anything the back end. It's really going to support that idea of backwardation in carry in the oil market.
When you take a 30,000 foot step back and you look at the state of the market today, what do you see as the biggest black swan event that could potentially disrupt this supply-demand dynamic that we've been following for some time now in the state of the market today?
Well, it's funny when you think about what we have learned over the last year. OPEC has shown its ability to increase production very high, reduce production substantially. So flexibility there. What did we learn about China? They can stimulate and they can delever. They've seen a big stimulus in January, but delevering last year. What have we seen with the U.S.? They've gone hawkish, they've gone dovish. What that starts to do is take out your tail risk, both to the upside as well to the downside. In terms of talking about the ability of the market to trade in a tighter and tighter range. So then you have to go to your question, where does the risk in the system go? Well, if we think about it, if it's the policymaker swinging policy back and forth, that's where the risk really needs to start to reside. It goes into the sovereign balance sheets, and so it goes diffuses throughout more in the sovereign side. So, if I look at it, a black swan event, more likely than not, it's likely to come out of one of the sovereigns.
Can I also ask you about some of the data that we're seeing coming out of China and also the state of play in the US right now? Are you seeing any tangible evidence that demand is actually starting to decline as a result of perhaps a deterioration in the global economic climate right now?
No, absolutely the opposite. I like to point out, due to the bottoms-up analysis on commodity demand out there, it's relatively rock solid, whether if you're talking about metals or energy. And when we think about the energy picture, the question I'm getting is the demand is so solid in China right now, how much of it is going for restocking? I think it's key there to think that China destocked a lot last year. Fears over a trade war, a devaluation of its currency. They destocked, so some of that is going to restock those previous destocking. But I think the bottom line, the answer to your question, demand looks really good right now.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.